We have the tax lien directory below. We have the 1,500 phone numbers. What you'll do is, like, let's say you want to go to, where are we here? Marshall County in Illinois, Iowa. Where is it here? Oh, in Iowa, Marshall County. You'd call them up and you would get the specific rules on how to attend their tax sale. So you get the rules, you show up, you go, and you get in the game. Now, folks watching this will have a decision to make if they should be doing, maybe they want to do all of it, tax liens, tax deeds, the whole thing. But one of the bigger questions that comes up is people are like, oh, what should I start with? And remember it this way. In my opinion, if you have less than 50,000 bucks, start with tax deeds and flip your way, make $50,000, $100,000, because when you buy a tax lien, you get an interest rate, which is great, but your money can be tied up for up to 2 years. So you're going to get that interest rate, but it's more of a hands-off approach. So you can make good money, a great interest, more hands-off, less involved. However, a lot of the really big home runs come from tax lien sales, and here's why. So tax liens, 95% of the time, they redeem, which is awesome, right? So it's one of the most secure, predictable investments that's been around for 200 years. It's not going anywhere. So it's been around a long time, and most of the people pay their taxes, which means you get your interest rate. And then in the tax lien state, one of the big questions is, well, what happens if they don't pay the taxes or pay you back? That's where you get the home run and you foreclose on the property, and you basically get it for the back taxes plus the cost of foreclosing. And the true beauty is that it wipes out the mortgage, because the tax lien is always the priority lien and anything above it gets wiped out, right? So that's why banks are one of the largest redeemers of tax liens, because say it's a $100,000 property, you bought the tax lien for $1,000 and they haven't redeemed you. So the bank is going to come and pay the taxes, because if there's a $80,000 mortgage, they're going to get wiped out if you foreclose on your tax lien. So banks are one of the largest redeemers of the tax lien. However, banks are also one of the largest investors in tax liens. So many of you guys here right now are already tax lien investors. You just don't know it. While your money is sitting in the bank is paying you nothing, taking that money and going and buying tax liens, making 5, 10% interest. And on the properties that don't redeem, they're selling it and they're making big money. So that should upset you quite a bit that most of you guys here are already tax lien investors, because banks are one of the largest investors. I've seen it before. A banker will just go blow through $1 million at a tax sale of your money. So this should make you upset. But the big home runs with tax liens come when, say, if it's 95% redemption rate, that means 1 in 20 won't redeem. So if you buy $21,000 tax lien certificates for $1,000 each, that means you're going to get anywhere between 8 to 13, 18% on your money. So you get all that back, and your $1,000 tax lien, say on a $100,000 property, it doesn't redeem. So that's when you foreclose. So you would pay out the other 2 years taxes. So that's $3,000, pay a lawyer $2,000 to foreclose, and boom, you got yourself a $100,000 house for $5,000. And that's the math, 1 in 20, and you just need to take action. So that is the tax lien side of the game, which might be appealing to a lot of people.